following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Look at our man, Jim from Minneapolis. We gonna take it by storm?
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Manifest your true intentions. Regardless of what language you speak, your manifest will be your intent will be manifest through the word. What you dream, what you feel, and what you really are will be manifested through what? To what you say each and every day. Market eyes, let's take a look at it out here. We have the Dow Industrials down 1790. NASDAQ is off 482. S&Ps are off 151. We get the Dukes up, folks. Bottom line is that we got the first bounce of the day. And, bottom line is that we're going to have to fight our way through this, man. That's the real bottom line. I know this is bizarre. We went through this yesterday. The luck of the Irish brought us up there yesterday. Well, guess what? The luck of the Irish right now are going to basically do everything and anything to get us back inside 2355 on that S&P. We get back inside that right now. We're getting near it. Bottom line is that, I don't expect anywhere near any green out here. But if we can get that S&P down 75 instead of 150 right now that we got, you got to start happening once again. Why? Because you had a big flush down in this market, folks, at, at 1420, which is just 20 past 2. Went down fast, furious, all of the above, where there's divergence in this market as to the European markets. As this, European markets, you had the FTSE off 4%. The DAX was off 5.5%, where we went down over 10. Big numbers, folks, okay? So you get a decent probability that you're going to get some kind of surge coming into that close. If we go over and we take a look at the DAX first, in Germany, what you're going to see, the DAX held price, meaning held price from 2 days ago. We take a look at the UK. Bottom line, UK out here held price from 2 days ago. And those indices, by the way, were much weaker than our indices. NDX 100 is still the place to be if you're going to be stepping into this market. If we take a look at the NDX, what you're going to see out here, if I just use the 3 Qs, what you're going to see out here is that the 3 Qs have been basically testing the highs of the lows of 2018. And, the bottom line, the rest of these indices have been at the lows. And in the lows, we're talking about in the NDX 100 of the 3 Qs, are 143. The low that's been established out here thus far is 166, and your rejection would be at 173.31. Right now, we're at 171.41. We get over and we take a look at these the NDX 100, the Qs in general, and the way the Qs in general are trading is that they already got back inside the limit down that we established out here this morning, which is 69.80. So that also sets up a decent probability that you are going to, the NQs could all get up to about 72.17, and right now you're only at 70.17. So you're talking about monster numbers all over the place. It's pretty amazing that when we start talking numbers out here, you're talking about percentage moves in basically, you're talking about 2 or 3 minutes, that you're talking about 1, 2, 3% moves inside the marketplace. Gold contract down $28, trading at $14.98. I get silver down 50 cents, $11.99. A light sweet crude. Tough day in light sweet crude. Let's go pull the light sweet crude contract up. CL. Let's get the active contract in front of us. The active contract right now is the April contract. That's down $5.24. Just a monster move. And if I put the continuous contract up, I believe this contract looks like it wants to run to $16. Pretty amazing number. We take this back. Let's bring this back. You're going to bring this back quite some time. We took apart the swing point that it was going after, and that swing point there, I believe, was about the $25 level. Let's see. That was 26.19. You're below the lows that were established out here in 2008. You're going after. Yeah, you're going after 17, man. $17 is game. You break that. We're already right now. We're back to 2000 levels. The year 2000, year 1999. What were you doing in the year 1999? That's where the oil price is at this particular point. There's plenty of oil out there in a huge way. Notes and bonds continue to go lower in price, higher in yield. You get the 10-year right now down 1.18 ticks. The 30-year is off 4.4 ticks. This is a big number, folks, okay? Because the bottom line is that this would be about as deviant as you can get inside the marketplace. We know that the ABC up finished. And when an ABC up or down finishes, it likes to do something different than continue on the same way. That being said, bottom line is that what you're going to see out here is that your 10-year rate right now, we are at 1.21. And let's see, 7 days ago, you were 0.31. How about that? How about that for a move? We go take a look at the 10-year active contract. And the active contract right now is down a full point plus 19 ticks. This baby here can go all the way back to its breakout area, which is 130, 130. I expect that's what you're going to get. And in that context, folks, what that is saying is that this thing is drilling out a bottom. I know it is what it is. I'm just giving you the correlations inside these different vehicles and how these vehicles like to move. NDX 100, the strength versus the weakness inside the NDX. This is what you have. You have Gilead's up 6.5%. You got Walboots Greens up 4%. Costco is up 3.5%, and Citrix is up 1.2%. Taken away from it, airlines and vacations are in big trouble. You got the United Airlines down 30%, Marriott's down 28%, Apple's off 21%, and NXPI is down 20%. The amazing part, you want to see something that absolutely is amazing? Well, we saw it inside the Costco deal too. Walmart, folks, I believe, if it didn't hit the all-time high today, it was almost there. It's like Walmart, yeah, it did hit an all-time high today. So the all-time high in Walmart was $125.38. We hit $128.08. You know, what that's all about is, guess what? The amount of folks that are buying and filling up their shelves is exponential. And you're talking about just a monster move. These houses are going to be filled with goods for probably the next year. Dow Industrials right now down 1,600. Nasdaq's off 447. S&Ps are off $140. We'll come right back.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now down 1732. S&P's off 157. Nasdaq Composite down 484. So if we go take a look at the composite first, and we're going to go into the Dow here, what you're going to see, the composite got down to 66.86 today. That being said, you pull this up. Your benchmark out here, folks, is the lows of 2018. That's what they wanted to get on down to. They got down to it, meaning the S&P, as Dow Industrials smoked it. Bottom line, though, you can see that the composite, so in the order of strength, you have the NDX 100 is the strongest in a bad market. The composite is next. The S&P is next. The Dow Industrials, and then it would be the small caps. So if you're looking to step in, I would suggest you get into those NDX 100 equities. You can see it pretty clearly when you look at the composite. The top of the 2018 composite number is 74.86. We're at 68.59. We got down to 66.86 and 61.90. We go into the NDX, and you're going to just see that differential is pretty glaring, actually. We take a look at the NDX, and you're going to see the top of the 2018 is 71.06, and we made 6,800. We're at 7,000. The bottom of that is 5,800. So, you know, if we ever get to 5,800 in the NDX 100, I don't even want to think what the Dow or the S&P would be at. So I'm not in that camp, by the way, okay? But I'm just trying to explain that if you are stepping into that market, where you should be looking. If we go to the IWM is just an absolute mess. Has been a mess. IWM never got to the highs. That basically ripped apart the 2018 swing low. That was 125. You're at 98 right now. The IWM is back trading where it was in July of 2013. And if you want to take a look at that, the thing is amazing, folks. You know, last time, you know, I've been doing this a long time. The last time that we were up, even had any volume, was 116 to 103. And the way that works with the out of time in the trade is that, guess what? That's where it's going to go back to. Well, it not only went back there, but it blew it away. And what does put game in there now is about $80. And if you want to see another one that was set up just like that, hard to comprehend, it was Boeing. Bottom line is that even last Saturday night, I said to someone, they said they're buying Boeing. I said, man, Boeing's going to $97, man. Well, it hit $89 out here today. And where I was getting that has to do with July of 2013. the high was 109, the low was 98. It had volume there. That's where this Boeing is a real sick one as to how high it actually went without volume. And then if you want to see with volume coming off the high, it's all there. So Boeing right now also is back to 2013 levels, and Boeing will need a bailout. When you're looking at bailouts, okay, what you should really understand that the government, yes, can bail them out. And they will bail Boeing out. They have to bail it out. But that being said, that doesn't mean that the stock is going to stay at that same price either, because what ends up happening, depending on how these get arranged, Boeing can need billions and billions of dollars, and we'll see how they come in, whether they're coming in with stock, diluting the stockholders. This is no doubt going to be a replay of the 2008 debacle on the way down. And then the fights are going to get established once again out there as to the companies, how much do the companies already profit by this? More so, the Boeing wouldn't be the case. The airlines, I would say, they're going to be the case in an extraordinary way, because we know that United, American, Delta. The bottom line is that they all took the public to the cleaners. They basically made billions and billions of dollars, and all they did with those billions of dollars, instead of saving them like most of us that are working just to make sure that you have some bread in case something does happen, the bottom line is that they basically just divvied it up, took it out of the marketplace, took it out of their business, and bought stock back, so that when you're buying stock back, of course, the stockholders and particularly the executives, this is where this comes down, particularly the executives, bottom line, can get their bonuses and get all of the above. And that's where, no doubt, it comes into the deal about privatizing the profits and socializing the losses. Let's go to Al in Tampa. Hey, Al, what's going on?
Man, this is crazy what's going on.
It certainly is.
You know what it reminds me of? Back in 9/11, right after that, we had, I don't know if you remember, the market started going down from May and stuff like that.
Yeah.
And I had shorted the airlines right before 9/11, and I ended up buying like Priceline, and I had to sell it, but Priceline went eventually to like $2,500 a share, and I was buying it for like $1.36.
Crazy.
I don't remember if you remember all that.
No, I remember it, yeah. So you're looking at Carnival.
Well, I want to look at the CCL. I bought it today. I bought it for like $8.40 a share. I bought 500, and then all of a sudden it shot up to $9, and I went ahead and sold 400 shares.
Get rid of it right now.
That was less than 10 minutes.
Get rid of it right now.
But I put it. What?
Get rid of it. They're going bankrupt.
Oh, I understand.
All the airlines are going bankrupt.
I put a 5% stop in it anyway.
Who cares? Just get rid of it. This can open down to zero tomorrow morning, okay? The cruise lines, folks, my take is this, okay? The airlines, we're going to save. The cruise lines are not going to save, man. They're not going to save. They're going to let the bank, they'll BK the cruise lines, and everyone that is owed money in the cruise lines, they're going to BK them. There's no reason, you don't have to, the cruise lines are the cruise lines, big deal. The cruise lines, all these flag, these are all flag carriers from other countries. Yeah, are they? A lot of them are businesses. Yeah, are there a lot of employees there? Yeah, are those employees from the United States? No. The cruise lines are going south, man. They'll just BK the cruise lines.
They're going to BK. I'd like to see them do with the cruise lines and stuff like that right now is move them up to the military bases and stuff like that, and use them for hospitals.
Well, we get two
New York
hospital
or something.
The last thing I want to do is get on a cruise line if I was sick, man. Those are the petri dishes of this whole deal, man. Forget it. Yeah.
Okay. Well, I made some good money on it. My cost basis on them there, so I'll go ahead and sell the other 100 shares.
Take your money and run, man. Take your money and run. Cooking, brother.
Okay, thank you.
Have a great one, man. Have a safe one. We'll see what happens, though, folks. But my take is that the cruise lines, they're all going to go BK. It's the quickest way to get them back on their feet. They are not a crucial industry. It's not even close, okay? They're all flagged outside the United States. The workers are all outside the United States. And that is not the main reason. My take on the main reason is that they're not crucial, man. Do you know what I mean? I know people love them, but it's not a crucial. It's not like Boeing or a defense contractor that we absolutely need. Okay, that's gonna work its way out. That being said, as it works its way out, it doesn't mean the stock stays the same price. That's where these differentials are going to come in, because if you remember how this works, okay, just like you got to remember, if the government decides to have to keep them alive, put 100 billion, 200 billion, whatever that is, bottom line is that they're going to have to come in and say, okay, I want preferred stock, I want this, I want that, I want all the rest of the stuff. Dow at 1,858, Nasdaq off 524, S&P's up 166. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 2,000, Nasdaq's off 556, S&Ps are off 184. And folks, as you come over to our website at TFNN, now we know that we get the virus, we get folks working from home. Bottom line, if you have never, well, it doesn't matter whether you've been in the Tiger's Den or not in the Tiger's Den. Now, what the Tiger's Den, folks, is it's a trading room we have, okay? Great room, a lot of great traders in there, a lot of camaraderie in there. This is from all over the world. Well, we've opened this room up. It's open house at the Tiger's Den. You can go in there 30 days, absolutely free. Easy to come in. Just go to TFNN.com. You're going to see open house. bottom line is you hit open house. You're going to hit subscribe. What this does, you are going to pay for 1 month at $39. I believe though that I know that it is refundable. Bottom line, there she is. 1 second. So if you like the Tigers Den, great, you can keep it. You don't, you get a 30-day money-back guarantee, okay? You have everything to win, 0 to lose. As you're hanging out home, you're hanging in your business, wherever you are, bottom line, come on in. You know, it's a great time to be in there, number one. For ideas, camaraderie, and the whole ball of wax, okay? For all you folks that are already in there, tell all your friends, okay? We want to really ramp this baby up. This is a unique time. There's no two ways about that. Most of the time, the Tigers Den stays active, folks. Markets open about 7 hours. Figure about 9 hours. And then you do have, you know, maybe about 10% of the folks are in there at night trading the European markets, watching the European markets. You get a huge amount of information. That's the real bottom line, folks. And it's great information. It's real information because folks are basically putting their bread up. This is not just a room that news is going through. It's more so a room that what is going on inside of the market. And as we get into the next 30 minutes, I expect you know, this thing is going to stay as volatile as ever. Let's go over to the gold market. So yesterday what we had is that we had the gold market. Oh, actually, it was 2 days ago. The gold market was the first sector to basically get into a low, say, see you, don't want to be you. That's when the GDX was down at $16. Bottom line, it gets all the way up to 22. Yesterday, we go all the way up to 25. You're backing down now to 21. Now, the back down here is dramatic. The back down is an extraordinary light volume, which is really positive for the GDX in general. What we have out here is that when we went topside, you went topside with 199 million shares. You're backing down with 56 million. That's what you like to see. If we go to the Gold Bugs Index, we take a look at the Gold Bugs Index. What you're going to see inside the Gold Bugs Index is the same type of setup. Bottom line, the Gold Bugs Index had gone from a price point of 142. You get up to a 203. And now we're back down to 175. And the XAU, right along with that baby, did the exact same thing. So bottom line is that sector, well, outside of, you had Walmart, Amazon, I believe Costco too. Let me look at Costco. Those babies hardly back down at all. Yeah, those are the strongest stocks in the marketplace right now, and that is even like it didn't even pull back. And of course, what that has to do with is that you are going to see some extraordinary numbers out of that, because picture. Every single day, those stores are getting basically wiped out, meaning everyone's buying. There's hundreds of thousands of people inside those stores buying everything off their shelves. I'm sure if we look in the United States, houses and refrigerators and cabinets have never been so filled. Let's go to Jimmy in Boston. Hey, Jimmy, what's going on?
Hey, Tom. Great to hear your voice.
You also, man. How you been?
Yeah, good. You know, I've been a listener for going back to 2000. And I have a question about ticks, but I want to set it up because that was a crazy year, and you did some really amazing things. And if anyone's listening out there, if you remember, Tom, the internets, they cracked really bad. I think it was in February or March.
It was started on January 3rd, and then March 10th, exactly, yep. Okay.
Right. And then it was, and I had been listening for a while. I said, you know, that was my first exposure to technical analysis. And so I went short when we cracked. And of course, we had that vicious updraft before it plummeted.
Yeah.
Do you remember?
I do.
How it's the setup. And you were getting a lot of calls at that time. And it was really amazing from people that were really panicky because they bought back up at those highs. And by like, I don't know when it was, maybe late summer, early fall, they were gagging. And you saved a lot of people a lot of money on those. And then the market really started to get bad. And I remember one day, and I'll never forget, it was one of the greatest calls that I've ever heard. You said, okay, here's what I think is going to happen. If you see the ticks blow out tomorrow to down 2,000, if you see them go down 2,200, it'll be gut-wrenching, but you can buy everything in sight because it's going to turn. And that's exactly what happened. Do you remember that?
No, I get it, and we haven't had that yet. Listen, what's going on? So I was over these ticks all day today, right? And what we've had is this. This is because of the way that the market, folks, has gone up and down so dramatically. You can see out here, today was not bad. We got a minus 1761, you know, and that's not bad, but it would be nice to even get something higher. What we haven't gotten, this is where, you know, it's a real problem child here. We haven't got the trend readings that I'd like to get, you know, to basically get turns in this marketplace. We just haven't got them. You know.
Isn't it like, I think it's really impressive that we've had this kind of price destruction, and I have to think a swim. I'm only seeing I saw the 1700, but a lot of these days it's going down huge on like 1,000, 12, 1,300.
It is,
which really is kind of scary.
It is, because okay, so watch this, folks. What that means, what that is happening, is that means even though we don't think this is orderly, that's an orderly downdraft, which is really dangerous. Right, yeah. So.
But anyways, I just wanted to touch bases. I think Wall
listen,
Street
man,
would be
I wish
a better
we had
place
those ticks today. You know, there's no doubt. What happens, folks, is that the ticks are important because what ends up happening, even at the 1 or 2 o'clock this afternoon, we only got that 1700. So what you like to see is that explosion, that numbers that you haven't seen, and we don't have that. So.
Well, it's great to call, Tom, and keep up the good work.
Great to hear your voice, man.
Thanks a lot, Tom.
Time flies, doesn't it? Crazy,
man.
man.
You got that right. All right, take care, Tommy.
Okay, have a great one, man. Have a safe one. And as we come in here, let's go take a look, man. They want to sell this thing down. Unreal. Let's see. You got you get a slight bounce. We have the slight bounce at 2361. You're at 2312. 2320. Okay, so there's going to be a battle right here. The longer that we stay under 2320, the higher the probability is that this thing will get flushed. What has been happening, folks, and this is really important to wrap your head around, and I know it's hard to wrap your head around anything at this particular point, but what you do have is that your volume has been contracting pretty dramatically, you know. Yesterday in the SPY, you did 262 or 263 today. You know, we'll do maybe 300, but that's still basically a contraction from last week. Dow Industrials down 2142, NASDAQ off 568, S&P's off 190. We're coming right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow is down 1961. Nasdaq's down 530. S&Ps are off 170. And let's go over this Tiger's Den again, folks. So the open house in the Tiger's Den, you come over to TFNN. The Tiger's Den, of course, a trading room, open 24 hours a day, great room. We have an open house. So you come over, you hit the open house, and this is the information. I gave out the wrong information. It's not a 30-day money-back guarantee. It's going to be free. The first month, folks, is free. Just free. F-R-E-E, period. Come on over. Check it out. You're in there for a month. It's free. If you decide to stay another month, then that charge will kick in. So the bottom line, tell your friends, please. We want a big crowd in there. We want to be all growling and prowling, all those tigers and tigresses. Basically hang together, stay together, and see if we can basically get something going inside this marketplace. Let's go to Gene in Clearwater. Hey, Gene, what's going on?
Hey, Tom, can you hear me okay? I'm driving and really...
It's coming in great.
You're on the speakerphone.
Yeah.
Can you hear me okay?
Yes, sir. Yes,
okay.
ma'am, yeah.
So I was shopping CD rates today in North Pinellas County, and I was surprised that one bank in particular was offering for a 5-year CD 0.45%, and for a 1-year CD, I think it was 1.46, and I've never seen that before.
Yeah, they've been low for a long time. I mean...
But is it common for, I've always seen the longer you go out, the higher the interest rate. This is a complete reversal.
Yeah, it's a curve, right. You know, so what they're doing, I would say that it's just kind of like the mortgage business right now. What happened, this is pretty amazing, folks. So the lows in the mortgage market, even though that the 10-year was 0.31 about a week and a half ago, the lows actually in the mortgage market or actually go back almost 3 weeks. And I think it has to do with there's just so much, demand versus the supply, Gene. Do you know what I mean? And evidently the CD market's the same way. There's probably more people that are saying, hey, listen, man, I just want to hope that I get my cash back and I'm going to park it somewhere. Do you know, that's what you're running into, I think.
Okay.
Yeah.
It's as simple as that then. Okay.
Well, we know that nothing's that simple, but the CD market in general, I would say that, yeah, that's because then what are they going to do with the cash? So always get a picture of something. That everyone is, you're taking the cash, then what are you going to do with the cash? And right now, we're in a repricing, and I would say, folks, we're in a repricing of everything, period. Do you know what I mean? No one is insulated here. There's no insulation that's out here. For the type of destruction that has happened, I don't know. I'm sure we're going to, the statisticians will come out with numbers, okay? But if we take a look at just the S&P in general, right? And we put this up, let's say, I'll put it back, and we are at levels of January of 2017, and that has happened in. We're not even on the second month yet. That's happened in 6 weeks. So, that's going to reprice everything out here. Yeah. And we don't know what the prices are yet. That's the scary part of this whole deal. Do you know what I'm saying? Yeah. Now, what I mean that we know what the prices of the stock market are. We don't know what the repricing in will be the real estate business. You don't know the repricing in anything in particular, because picture, no matter what you were buying, last couple of weeks, I mean, we're all kind of the same. It's like, okay, are we going to really pay that much? And we don't know yet. It's too early. You know what I'm saying, Gene? But
yeah, I mean, we could either at this point, I don't know the answer. Either we can have deflation or we could have inflation. It could go either way, or am I way off on that?
No, you're not. You're not. I mean, when I first when I first saw the programs that they're coming up with, right, it would make sense that, okay, they're going to print money beyond belief. They're going to pass the money out, which I think they should. I mean, these workers have to get paid ASAP, okay, so I like what they're doing there. And when I first thought about that, I says, okay, well, that would be inflation, right? But then when I looked about the amount of money that has been lost inside the marketplace, you get all these losses taking place. You get money that's printed. The losses that are inside the marketplace are much larger than what's going to be pushed out there. So, what you just said, I don't think we know yet whether it's going to be inflation or deflation, Yeah. So it's...
Well, thanks, Tom. Thanks for all your information that you share with us.
Come on in the Tigers Den. The Tigers Den's free. Tell your friends. Get in there.
Okay, I got to do that.
We need more Tigresses. We got Tigresses in there. We got a few great Tigresses in there. You get in there, too.
Okay, great. I will. Thanks.
Okay, awesome. 877-927-6648. We go take a look at the... let's go take a look at some of the higher volume equities out here and see what we got. What's popping up there? So you got Advanced Micro's down $3.50. Microsoft's down 9. Apple's down 12. United's in trouble. United's in big trouble. It's down 33% today. Boeing, that's in big trouble also. That's $98. That's down $25. Citigroup's down 5. So, these... What is proving here, folks, okay, which is pretty amazing, is that we are in the tech era. There's no two ways about it. And what it's actually proven is that these tech stocks are basically strong, number one, resilient. It's not that they haven't been down, but when you take a look at where the rest of the equities are versus these tech stocks, bottom line is that you're still up at pretty amazing highs. I mean, take Microsoft, okay? So the high in Microsoft, does go back to February 11th, is 190. You're at 137. I mean, that's a haircut, that's for sure. But when you take a look at it, Microsoft is still only back to June of 2019. Amazon's one of the big dogs, no doubt about that. And our habits in particular, folks, also are going to be changed on a larger scale. Because there's if you've been ordering online, I mean, yeah, those habits don't change. You'll keep doing it. But what has happened in this coronavirus is that more people have got online because they have to get online. Those are new customers that I feel that they'll, like the Amazons of the world, the Walmarts of the world, that hey, this is very easy to do. Package shows up at the door, you get whatever you want, and you haven't basically walked out of the house. Amazon, it doesn't even look like anything has happened inside the marketplace. Amazon has been in this consolidation since June of 2018. And, Amazon is not coming down on volume. The last time Amazon came down on volume was that December of 2018, and you had 154 million shares. And this month, we've only done 97. That's amazing for the type of market that we've actually had. So that's the resilience inside the marketplace. And of course, if you haven't heard it yet, Walmart went to a new high. This is going to be a textbook story about how do you get to a new high. But last couple of days I was in Publix. Publix is not a public company. But the bottom line is, as soon as I went in, I says, "Oh my God, this is just phenomenal! The amount of stuff that is being bought, and of course, those are going to be profits that are all made. And Walmart is the king of the food stores, of basically pricing in general, and that's why it's at an all-time high." Dow Industrials down 1692. Nasdaq is off 468. S&P's down 148. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 1441, Nasdaq off 410, S&Ps are down 115. And folks, this is making the run, man. We got inside that number that we were talking about at the beginning of the show, and that number had been, let me pull this back here. So that number that we had to get over was the 2366, but we also got back inside the number of the 2355, which was the low out here at the open this morning. So the bottom line is that you can see this thing run all the way. I mean, that's the bottom line. Let's go to Robert in Kansas. Hey, Robert, what's going on?
Hi, thank you for taking my call. I know you only have a short amount of time left, and I have a general market question for you. In this kind of environment when, things do begin to turn, would you recommend, the Dow is always considered like the best stock, the diamond stocks. Would you recommend investing in the Dow, or do you think it would be better to invest in like the Qs?
Okay, so you've been listening, right? What have I been saying like 8,000 times a day?
Well,
what is the strongest index?
Is the Qs are in a consolidation. You just gave the example of like Amazon.
The Qs. The NDX 100 is the strongest, like by far. Like, stay away from the Dow Industrials. NDX 100 all the way, man. That's it.
All right.
Cooking, brother. Have a great one, man. Have a safe one. Just let's get it clear, folks. NDX 100, you get the biggest downdraft in our lifetime, fastest downdraft in our lifetime. NDX 100, tech is the name of the game. And let me tell you something. After this coronavirus, the government and the people in general that don't believe in science, maybe they'll stop believing in science, okay? Because the bottom line is that if you don't believe in science, folks, that's the quickest way that you're going to go south. I mean, real quick. NASDAQ. Let's take a look at the NASDAQ. We say the NASDAQ is the strongest, so let's take a look at it. We take a look at that NDX 100, and what you're going to see out here, the NDX 100, bottom line is that we're down 250, and the NDX 100 was at 68.30, and you're at 71.50. Gotta love it. Folks, please tell all your friends. Let's get all these tigers and tigresses. Let's get in the tiger's den, growling and prowling. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize like a nice big motion picture. Step into it, take ownership, and have a blast. Come visit us again tomorrow morning. Tommy kicks us off. Great show, 8:30 in the morning. Wow! Go get 'em.